Hi everybody, this is TJ with netpicks.com and the Trend Jumper trading strategy. It was a real interesting week of trading, so I thought I would do a video and highlight some of the most interesting trades and thus title this video Interesting Trades. So I'm going to show you several examples, and I'm going to start off with the DAX futures contract. This is a long-running trade plan on the Trend Jumper Owners Club. It's well over 2 years old, and it has been working spectacularly since the day it came out. It still is. A lot of great trades this week. I want to show you a trade that occurred yesterday on December 18th. Now, the way this works, we use a 233 tick chart. We're using the standard Trend Jumper approach, and I've also included the Trend Jumper Reversal Trader as an additional setup. And I found that it really enhances the strategy. It was working great without it, and with it, it even works better. We start looking for a trade at 9 a.m. Eurex time, exchange time. So this is great for those trading in the late night or in the evening or over on the other side of the world in the European session. The DAX futures is an amazing strategy and market to trade using the 233 tick with Trend Jumper. With this setup, we actually have a long setup here right there. But notice that the time is at 8:51. Remember, we're going to start looking for trades at 9 a.m. It does trigger in, but it's still not quite 9 a.m. Now, if it has not stopped out and if it has not hit its first target, which we call the money management level, we could get in sync with this trade if it touches the entry at our start time or a little after. Okay? But look what happens. It actually pushes lower, and that's 2 minutes before our start time. And then you'll notice that it's a green setup. The green setup is the reversal trade. Okay, so this is the optional trade, the Trend Jumper Reversal Trader. It's integrated in with the Trend Jumper Pro Plus calculator, or you could use the standard Trend Jumper indicator set and then add the plugin, the reversal plugin. Okay, either way, it's the exact same trade. So we're still waiting for our start time. Notice that right now it's 9 a.m. and the price is below our entry. But if it hasn't hit the first target, the money management level, and if it hasn't hit the stop and it comes back up, we can go short. We could take the trade. Now, because the setup happens below the bar, that means we're going short. Of course, all we have to do is click on the bar, and you get the entire trade laid out before you. Okay? So I'm not looking to get short right at 97.20. One of the things you learn with the Trend Jumper training is that we are big sticklers on key levels, and usually if the price quote is on a 5 or a 10, in this case 20 is a multiple of 10. I like to even just say a 5 or a 0, right? There's your 0. I always adjust one tick beyond. So I'm going to look to get short at 97.19.5. It's just what we do, and it makes a big difference. And it does stab up, and it actually stabs through. And so you get short right there, and you get short at 97.19.5. You're targeting 96.88. And the stop is at 97.38. And you'll notice, and this is the case with most Trend Jumper trades, you have a really favorable risk-reward ratio. The space between the entry and the stop, of course, is how much we're risking. We're going to take one position off at the second target, and the second position will try to trail the green dotted line, the jump line, in case we can get a bigger move. But notice that just that first position's coming off with quite a bit larger reward than how much we're risking. And that's pretty much built in to most every Trend Jumper setup. Okay, so this gets short and it pushes down and it almost hits the first target. Now when it does, if it does hit the first target, we're going to move our stop from up here to down here and lock in one tick to cover the cost of our trade, offset the commission, maybe a little slippage. So when it pushes through here, the stop's going to move down. Not only are we going to lock in one tick, but we're also going to trail the jump line. And that's what happens. The stop keeps moving lower with every bar that closes below the jump line. The stop follows it down. And it hits the full target right there at 96.88. And that's a really nice trade. And that trade is going to push this trade plan up to new all-time record profit levels for this year and for the history of this trade plan. That one trade is good for 31.5 points just on that one position. Now we're still trailing the second position, and it pushes down a little further, but then it ultimately bumps up against the yellow line, which is no surprise. Sometimes you'll find that that's going to mark a nice longer-term trending level support right there at the yellow line. It pushes up, stops out at 97.04. Again, I'm going to adjust that around the 5 level, so that actually is going to stop out at 9705.5. And that trailer is good for 14 points. So all in all, that trade makes 45.5 points. Each point is worth 25 euros. So it's a very profitable trade. 25 times 45.5, 1,137 euros. So put that in dollar terms, and you can see it's probably a $1,500 day, give or take. You had to think through it. You had to stick to the rules. The start time is so critical to this trade plan. You can see how getting in too soon would have resulted in a losing trade. That trade coming in at the end of a real strong move up. Okay, more interested in going short here. As you can see, the setup happens, and that target perfectly placed just overshoots it just a tiny bit. It's exactly what you want to see with a trade setup. And that was yesterday's DAX trade. Alright, so next up I want to show you yesterday's crude oil session, because that was another really interesting sequence, and I'll explain it to you. Let me just get to that chart. Okay, so yesterday was the day we actually rolled over. We rolled out of the January contract and into the February contract, CLG15. Crude oil's contract rolls over every month. We're always interested in just the front month. And we're watching the volume. Usually it's around the 17th, 18th, 19th. You could see it was on the 18th, and the volume was split, but the majority of the volume had already moved to the February contract, and there's no stopping progress. So we just pushed our chart up and changed the symbol to the February contract. Now with crude oil, again, this is another one of our oldest trade plans. This has been well over 2 years using the exact same trade plan. Much like the DAX, there's a small difference in that the targets are dynamic. They're going to adjust up and down depending on the size of the trade, and that's built into the calculator. We're going to look at this using the standard trend jumper calculator, okay, just to get a different look and feel. Same strategy, simpler indicator set. So we start trading at 8:50 a.m. Eastern Standard Time every single day for crude oil. Same rules, looking for that first setup. You can see it's already 8:54. This trade canceled because of the rules of the trend jumper. It's a canceled setup. We're not looking to take that short. In fact, the next trade that happens is a long trade. You'll also notice that the price has had a pretty strong move down. You know you've been in a long-term downtrend, and now it's kind of consolidating, and it's reflected by the tight horizontal lines you see across the chart. Okay, we call this area here where the yellow line's pinching down on the pink line the squeeze zone, because the price is getting squeezed. And trades in and out of that zone are risky. Okay, but we do get a setup, and it's at 57.96, and you may want to adjust it above these 3 bars here that are as high as 97. So you're probably getting long at 98. You can make 1 or 2 tick adjustments just to make sure it pushes through that level. It already failed 3 times in a row. And what happens is it stabs up and hits that level, so that trade's getting triggered in, and it's targeting the middle target. So from 57.98 to 58.15, and target 1 is 58.08. Okay, so if it hits that target 1 and it's gone 10 ticks, which it would have done in this case, we will move our stop up and lock in 1 tick. And that's exactly what happens. It comes up and it hits that first target perfectly on the nail, and we're going to move our stop from here up to here, lock in 1 tick. It turns around, crashes down, and we get out of the way with a 1 tick gain. And that's why we do that maneuver, because one of the things that the trend jumper wants to do is put us in a risk-free position while still giving the trade enough time to develop and breathe. Okay, so we've got rules that we follow, and the rules served us well in this case, because you'll see as it attempted to get higher almost like a false breakout to the upside, it started crashing lower. And you'll notice that it's moving now in the direction of the yellow line as it's pushing down on the slower pink line. So I'm feeling pretty good about this short. If a short sets up, usually a false breakout one way leads to a good move the other way. And we've got all the lines kind of corroborating. All right, but what happens is it moves really fast and you end up with 5 strong red bars in a row, and then you get your setup. We learn with Trend Jumper that we want to read the price action, and that the Trend Jumper is typically based on the old adage that there's an action and then a reaction and then a subsequent action, and that's that whole stair-stepping phenomenon that we always see on charts and every time frame. And so the false move to the upside led to an action move down. You don't want to get into a trade at the end of the action move. What you want to do, and this is what we teach in training, is wait for the price to pull back and find some resistance up above before stair-stepping back down. Okay, so this trade would have triggered in and then triggered out. But in the trade room, we recognize this, and instead of getting short here, we waited. We waited for the push back up. Well, we don't know how far it's going to push up. It did push up through this faster pink line. So then when it came back down, instead of getting in right at the entry, I want to push one tick lower just to make it push through the lows of those 2 bars there. Meanwhile, I'm talking to everyone through this in the trade room. I just want to recap how we did this. The short was at 53. We're getting short at 52. And on the next bar, it gets short. Now, you might say, well, wait a minute. It triggered in and then it hit the stop. Isn't the trade over? And yeah, you would say it is. If you're just trading with the rules right out of the box, the way you first learn the Trend Jumper. But one of the things you learn as you gain experience is that there are some nuances every now and then, because you still want to take advantage of price action. I just explained how the false breakout up is leading to the breakout down. It's crashing through support. You got all the lines working in your favor. Even the pink line's starting to curl down. Okay, so I want to make money as a trader, and even like, you know, a naughty schoolboy, probably I was the naughtiest of all growing up. Rules are meant to be broken, and sometimes you just have to be a trader and trade to make money. So we've seen this before. We've seen how this works. Action, reaction. We want the subsequent action. There's a good trade here. Just got caught up in a little noise. It needed a little more time to breathe and develop. So when it comes down again, now I'm getting short. And instead of putting the stop here, I'm going to adjust it above the spike. So the stop right here is at 64. Remember I said we always adjust around 5s. So we're going to put our stop at 66. But this bar stabs up to 67. So I'm going to adjust it 2 ticks higher and put my stop at 68. Again, these are things we learn in the trade room, and this is exactly how we did this trade. Notice that the bar doesn't quite go that far. It's not done jiggling around. It's still got to find the jump line from which to jump off of. And notice that the jump line has moved down to 67. It's matching where the spike is on that bar. Our stop is at 68. This bar stabs up to 67. That stop was perfectly placed. It then pushes lower. Am I interested in this other setup? No, I'm not. I'm already in the blue trade. I don't need to worry about the extra setup. I'm going to show you in the next example on the Dowie Mini why we have these additional setups here. But you just have to know when to acknowledge them and when to ignore them. In this case, we're ignoring it because we're already in this trade. We don't need this trade, okay? It pushes lower, it stabs down, and it ultimately hits the target perfectly. See how perfect that is? That target was at 5739, and it stabs down to 5739. So we're out with our first position. Half the trade is out right there, and that trade was handled exactly how it should be handled, but it did take some advanced knowledge of price action and how the markets work, and also how the Trend Jumper works, the spirit of the Trend Jumper. Okay, so we want to stay within the spirit of the strategy. Sometimes we have to get away from the dots, know when to get away. Okay, so that's kind of what we did in this case. and then it pushes lower. We're trailing the green dotted line down, down. Finally, it stops out down here, and we pick up quite a bit more. That one gets out at 57.31, a few ticks above the jump line, and that creates a really nice trade on crude oil. This entire sequence, the 1 tick on the 2 positions, 13 ticks to here, 21 ticks to there. The entire session, 36 cents, 360 bucks. And remember, we started at 8.50 and we're done by 9:10. 30 minutes of trading. Our goals are met and we are done with our power of quitting strategy. That's how yesterday played out in the trade room. That's how yesterday played out with our crude oil trade plan. Let's take a look at the Dow Mini. All right, in this example, we're going to look at the trade session on the 16th. That was Tuesday. And the reason why I chose this is because it was an interesting sequence, and it's an example on why we have all these setups, even though most of them we're going to ignore. We're only going to choose the correct ones per the trade plan. This trade plan starts at 8:32 a.m. Central Standard Time, Chicago time, because that's where the CBOT is, Chicago Board of Trade. So 2 minutes after the U.S. stock market opens. And there's a setup here at 8:37, but it cancels. The next setup we get is a short trade at 8:38. Pretty standard trade. I mean, there's nothing magical about it. Momentum's shifted to the downside. You click on the bar, you get the whole trade in front of you. We're going to go to the second target. We're going to make our typical chart level adjustments like I've been showing you. So the trade triggers in, but it flips around and quickly stops out. So the first trade of the day on Tuesday was a losing trade. Then we get this long trade, quite a bit larger. Trend jumper is dynamic, adjusting to market conditions. This time we have a long at 17.084. We'll make that adjustment up to 17.086, just staying consistent with how we handle these trades, adjusting around the 5. The stop is at 5.7. All right, but meanwhile, the trade progresses, and you have additional setups, and I'm not interested in them. At this point, I'm in the yellow trade. That's all I care about. And it's quite a large trade, and it ultimately stabs up and hits that first target. So once it hits the first target, now we're going to lock in 1 tick, and we're going to trail the green dotted line. And it pushes higher and higher, and ultimately it's going to stab down and stop out. And that trade only goes from 86 to a few ticks below the line here, 89. It only gains 3 ticks, so 6 ticks on 2 positions. Okay, so once it stabs down, now we look to the left and see which one of these setups we might be interested in. Okay, this setup hasn't finished. It hasn't even appeared yet because this bar is still live. Right, it stabs down, the bar is still forming. We do have the pink trade, the white trade, and the white trade. Okay, I'm looking to get into one of these trades, and I want to get into the one that's closest to where the price is. So if it pushes back up, I could take one of these. Now, I cannot take the first one. That would be my choice, except that it has already hit the first target. We call that the money management level, and the rule is if we're going to get in sync with a pre-existing setup, it's already triggered in, theoretically, if it's already hit that first target, if the stop has already moved to a break even or 1 tick level where we lock in 1 tick, it's too late. We're not going to chase that trade. Okay, so then I look at the next setup, and the next setup did not quite get to the first target yet. Hasn't stopped out yet either. So when it pushes back up, I can get long again right here. Okay? And that's exactly how that trade should be handled. So you have a whole new setup from 97 to 22 with the stop at not 76, but 74, working around the key level of 75. Push that stop down to 74. Okay, so it does push up, it does trigger in, goes up and down a little, but the stop is way down here, right? Way down there at 74, and it does push down a little bit. And then we get a setup here to go short. Now, when I'm in a long trade, I'm not afraid of stopping and reversing to short. Okay, my entry was here. The new entry is there. It cuts the risk. A lot of times you're going to get out Actually, the entry was here, right? The entry was here, stop is here. All right. So a lot of times you get out of a losing trade, you cut your risk, and you get back into a winning trade. However, you got to be careful because sometimes you're just getting caught up in market noise, and this is in the squeeze zone. The yellow line pinching up on the pink line, and the yellow line is biasing up. So I'm not in a hurry to go short, but I can't ignore it. So instead of getting short right at the entry of 88, I'm going to adjust a couple ticks down just to give myself some extra confirmation. I want to see it push through, and then I have to flip over to short. And that small little adjustment is what saved the trade. And this is just what we do. We don't even think about it. It's just part of what we do. It did come down and touch the entry, but the 2-tick adjustment, trying to protect the long trade, kept us long because then it turned right around and headed up and stabbed right up to the money management level, right? Finally pushed up and hit that first target right there. So now we're moving our stop up and locking in a tick of profit. And that holds because when we lock in the tick, the stop goes to 98 and this pushes down to 102. And then it turns around and shoots up, and look at how accurate it hits target 2. Hits it right on the nail. And it's a nice winning trade. And that's why we have these additional setups, but you have to know which one to look for, which ones to ignore, when to look for them, and how to use them. And I realize that this confuses brand new people who don't take the time to actually learn how the trend jumper works. They end up seeing all these trades. They think, oh my God, look at all those false signals. But this was actually a really nice sequence if you just knew how to handle it. All right, we'll look at one more example. Don't want to leave our Forex friends in the dark, so let's look at the Euro Yen. That's another trade plan we do every day in the trade room. And we'll look at today's session. And again, this is a real noisy chart, but we're really not interested in any of the stuff that's happening over here. Okay, there's a reason why we have a start time, and there's a reason why we ignore just about all the other times. Okay, so we start at 8:20 Eastern Standard Time with the Euro Yen, and there's a setup here, but it's at 8 o'clock, and it stabs on down, hits the targets perfectly, but that trade's over. Now we're waiting for a new trade, and we're still waiting, and we finally get a long setup here at 9:15. But before that triggers in, we get another long setup here. This is a newer trade, and the price is gonna hit our entry sooner. We call this an inside trade. That's the trade we're going to take, and it triggers in. Okay, so at 146.47, always rounding that extra digit, assuming we get long 2 pips later after paying the spread at 146.49. The first target is 146.59, and the second target is 146.63. I'll push that target closer just to make it easier to hit, and you'll see what happens. Triggers in, hits the middle target, spikes up through the third target. It's a nice profitable trade. And with this plan, we could literally take one more trade if the market is showing signs of trending, and you can see the entry is way above on the second setup. So we can add to our position, and you'll notice that that one also comes up and hits that middle target. Now we're going to take a third of our profit off at the middle target, a third off at the third target, and then trail the rest. We're going to lock in the 1 pip to cover our, take the risk off the trade, and then trail. So this one comes up, hits the second target, you lock in a pip, and ultimately it crashes back down and it's going to stop out. But it ends up being a very profitable trade, and it's a great way to finish the week. Friday being a very profitable session on the Euro Yen. It was profitable all week. That's basically how we do this. You'll notice that with all these different setups, it looks like modern art, right? Well, that's about what it is, because we're certainly not interested in trading it. What we're interested in is picking and choosing the trades that the trade plans say we need to choose. And that's what makes the difference. It's not just a great strategy. It's how the strategy works with our rules and our discipline of trading in the same plan each and every day. This day made a new record profit level on the Euro Yen, another trade plan that's been playing out for well over 2 years. Alright, so there's 4 interesting trades this week. There were certainly a lot more, but that's all I have time to show you for now. So I hope you enjoyed this video, and I'll see you on the next one. This is TJ with netpicks.com and the Trend Jumper Trading Strategy.